DSCR, frequently asked questions. Hey, what's going on, everybody? Jeff Javartha, Jeff the Mortgage Pro here. I get to talk about DSCR loans today. This is kind of becoming one of my favorite topics to talk about. I've got some videos here on YouTube that are definitely some of the most watched videos that I have, and I feel like I've become an expert on these. So let me go through a lot of different questions. These are in no particular order about the questions that I get about DSCR loans, and let's go through them. But first, before I do that, do me a huge favor, go ahead and click on that like button down below if you like these videos, and it helps me get my message out to as many people as possible, and in this case, investors, hopefully, that are trying to buy residential real estate. And then also, if you could hit the subscribe button, because I would love to be able to have you watch all my videos when they come out, usually a couple times a week. But if you hit that subscribe button, that would really help me out. So thanks for doing that. And again, I'm always flattered to have people watch my channel because it means a lot to me. So thanks so much for doing that. All right, let's look at some DSCR frequently asked questions here. The first one is, which is better, a conventional loan or a DSCR loan for investors? And I'll tell you the same thing that I tell everybody when I talk to them on the phone. It really depends. And it depends on your income, it depends on your assets, your credit, and your liabilities. If, we're comparing apples to apples and you can qualify for a conventional loan versus a DSCR loan, then absolutely the terms on the conventional loan are probably going to be a little bit better than the DSCR stuff. But not everybody fits into that bucket. Not everybody can qualify for a conventional loan. So in that instance, the DSCR loan is going to be the better option for you. But one of the things that I always try to do, especially if you're comparing, a conventional loan to a DSCR loan, I'm going to give you both options, and I want you to figure out which one is best for you by comparing both those options. We'll look at the total costs associated with them. We'll look at the interest rates associated with those, and we'll figure out, hey, if you can qualify for both of these, which one's going to be the better option? Okay, and you'll see which one was going to work for you. So which is better, conventional loan or DSCR? Again, it depends on which loan you're looking at. Okay, why are interest rates on DSCR loans higher than those on like conventional loans? And the answer to that is quite simple. They are going to be higher in terms of rate, typically. Okay, not always, but typically, because of the flexibility in the way that we allow you to qualify for these. So with a conventional loan, we're looking at your personal income and your personal assets. Even though we can use the projected rental income of a property to help you offset that debt, we still have to look at your personal income going forward with a conventional loan. But with DSCR, all we're looking at is a cash flow of the property, right? We have no income verification, no employment verification, nothing like that. All we're looking at is, does this property cash flow or not? So with the flexibility in the way that we let you qualify, that's why these rates are going to be a little bit higher than the conventional loans. Okay. Another question that comes up a lot, do these come with upfront costs or discount points? And the answer is absolutely yes. So again, because of the flexibility in the way that we allow these to qualify, they are always going to be coming with a cost to it. And it can be anywhere from 1 to 4 points. Okay. If you have a really small loan amount, it might even be up to five or 6 points. So just be aware that they are coming with extra cost associated with doing the DSCR loan. Okay. It is a great loan and it works for a lot of people. But remember, the flexibility in the way that we allow you to qualify, if this is the only way you can qualify, you still have to pay for it, right? So you have to have a little bit of cost when you're getting a DSCR loan. So they do come with discount points typically, okay? Can I be a first-time investor when I get a DSCR loan? The answer is yes, you can. Not all of the DSCR lenders will allow this, but some of them will. And I've put together kind of a list just for my own qualification purposes, because I do talk to a lot of people who are first-time investors who want to get a DSCR loan or can't qualify for a conventional loan. And being a first-time investor is absolutely allowed in some instances. Oftentimes, it's not going to be as flexible in terms of down payment and credit, but if you fit as a first-time investor, we can cross that bridge when you get there. But yes, you can be a first-time investor when you're using a DSCR loan. Can the down payment and cash to close be a gift? Believe it or not, yes, it can. You can actually get up to you can get almost 100% gift as long as you have a minimum contribution, if you're the main borrower on a DSCR, of around 10% of the total cash to close that you need for that property. Okay. As long as you have 10% of that, then you can usually get a DSCR loan, and you can still qualify for getting a gift for that type of money. I've actually seen, even in some instances, if you're a seasoned investor and you've got multiple properties and you're not a first-time investor, I've even seen 100% gift allowed, which is pretty awesome. So yes, you can get a gift for down payment. Typically just, put that in the back of your head that you're probably going to need at least 10% of that money as your own money first. What's the minimum that I can put down for DSCR loans? That's another great question. Well, it depends on a couple factors. It depends on your credit, and it depends on how much this property is really going to cash flow. But typically a minimum investment is 20% down. I haven't found a lot of people who will do 15% down on the DSCR side of stuff. Can you do 15% down on conventional? Absolutely. But DSCR, probably going to need at least 20% down. Now, most likely you're going to need 25 to 30% down for the DSCR transactions. Okay. So I would shoot for 25. And if you only need 20, then you could use that. But remember, the less you put down, the harder it is for the property to cash flow. So just make sure that you know what you're dealing with. If we're doing a short-term rental versus a long-term rental, we need to make sure that you have probably 25% down is a good number to shoot for when you're doing down payment. So that's the minimum typically, but as little as 20% down in some instances. Is there a minimum loan amount for DSCR loans? The answer is yes. Most investors that I work with have a minimum loan amount of $100,000. I found one investor that will go down to $75,000. And then I found one investor that will go lower than that. But for the most part, $100,000 is going to be your minimum loan amount. Okay. Minimum loan amount, not minimum purchase price. So make sure you take note of that. Okay. The lower the loan amount, the higher the cost this is going to be. So you're going to see 5 or 6 points on a loan amount of $75,000, or between $75,000 and $100,000, just because an investor needs to make money in doing these transactions, and so that's going to cost a high amount of discount points to be able to get these types of loans when they're smaller like that. Okay, the bigger the loan amount, typically they're going to be a little bit less cost going forward. So if you're doing $1 million DSCR loan, it's not going to be 6 points by any means. That'd be like 60 grand. That's probably a lot, but it's probably going to be in the range of 2 to 3 points. Okay. So just so you know, is there a minimum loan amount? Yes. Usually 100,000. Only one investor that I know of will go down to 75,000. Can you do interest only payments on a DSCR loan? The answer is yes. A lot of investors will have this option to do a interest only payment. The rate is typically going to be a little bit higher, but what I always tell people is that we're not looking for the lowest rate. What we're looking for is the lowest payment. Remember that when you're doing investment properties, whether you're a first-time investor, an experienced investor, we want the lowest payment because we want the maximum cash flow going forward. So if an interest-only option is going to give you the lowest cash flow, then that might be an option that you want to take a look at when you're doing these. Some people don't like interest-only. Some people like to pay fully amortized payments, and that's totally fine with me. But yes, interest only is available if that's an option that you are looking at. What else? Do I need reserves for DSCR? The answer is yes. Okay. Usually this is just a risk calculation, and a lot of these alternate types of financing loans, other than conventional loans and, things like that, government loans, typically you don't need reserves, but you do absolutely need reserves for DSCR loans, as little as 3 months worth of reserves. Remember, a reserve is just a principal, interest, taxes, and insurance monthly payment. That's 1 month of reserves. So 3 months of reserves, so 3 times whatever that number is, will give you the amount of reserves that you need for your transaction. And so, this is, again, not money that you have to put into the transaction. This is just money that is used as a risk calculation for a lender. So always make sure you have reserves. You can use things like, savings, checking accounts, money market funds, stocks, bonds, 401ks, IRAs, all those things can be considered reserves. Something that's either liquid or somewhat liquid in terms of investments can be used as reserves. But for these types of loans, yes. And then the last question that I get a lot of is, do these have prepayment penalties? And I'll say it depends, because some states do not allow prepayment penalties, but most of them do. Okay. So if you're going to get a loan in a state that has a prepayment penalty, it can be anywhere from 1 to 5 years on there. The shorter the prepayment period, though, so it's like a 1 year prepayment penalty, the higher the rate is going to be on the rate spectrum that you'll be able to get for this type of a product. And vice versa, the longer the prepayment period, the lower the rate is going to be on the rate spectrum for these types of loans. So yes, they come with prepayment penalties. In some states where they don't have or they don't allow prepayment penalties, the rate is going to be on the higher end of the spectrum because the lender has to build that into the cost of the loan itself. Okay, so make sure you're aware DSCR loans all have prepayment penalties if they're allowed in that particular state. Okay. All right. If you guys have any other questions about DSCR loans, reach out to me. I'd love to hear more questions that I can answer, and I'm happy to do so. I'm going to put a calendar link down below. And if you want to talk about getting a DSCR loan, then make sure you reach out to me and let's figure out how we can get you a DSCR loan. And again, I want to be the DSCR loan and the investment property loan specialist on YouTube. So again, please hit that like button down below. Please like and subscribe. And I look forward to chatting with you on the next show. Have a great day. Bye.